People, welcome to a very, very, very special edition of Trends in the Housing Market. Today, I'm going to target Australia. Before you turn it off and click to the next video or something else, hear me out, okay? You must follow, if you're following trends in the housing market from Vancouver, or you're following it from New Zealand, or you're following it from Canada, United States, wherever you're following the trend in your housing market in your region, I strongly recommend that you follow Australia. Because Australia right now has been having a bubble, just like Vancouver, for the last 15 years, 16 years. They've been having this bubble. Now, what I've noticed, and I've been researching and kind of looking around at things, I'm seeing a lot of people have been living off their home equity. So basically, their total debt service ratio isn't enough for them to eat because the house standard and cost of living is so high. So what's been happening is people have been eating from their equity in their homes. That's the only way the TDS would fit. There's no other way unless they're getting money from heaven or they're working a cash job they can't declare. But in all fairness, a majority of people that do own homes for the last 10, 15 years have been building this equity and using that equity as they went along, okay? Now, there's a problem, okay? In Canterbury, in Australia, they started this economically, Australia has been failing economically as a nation. It's going bankrupt. Now, what's happened with, and people are laughing at me, what are you talking about, Mike? No. The countries are no more longer exporting like they used to, especially the English-speaking countries. If you pay attention, United States, Canada, Australia, South Africa, they're not exporting as much as they used to. A lot of companies were moved away from the continent to cheaper, more inexpensive labor. Okay? And what's been happening is Australia's been hinging on the housing market more to help its economy, which is a big no-no. Big no-no. Because it takes away from the futures of the younger generations that will never afford to buy into the market, or they're bought out. Same thing here in Vancouver. They're bought out of the market, they're finished. You can never buy. Wages. Housing prices have been going up 24% faster than wages. Than people's wages at work. Have been gone up 0% in the last 15 years. If not, they've been getting declines or getting less hours or being cut down to part-time. Now, it's really, really, really hard when you have no disposable income to generate some sort of a revenue to buy the cheap stuff. The stuff that used to be made in your country went offshore, and now you can't buy the cheap. You can't even afford to buy the cheap stuff anymore. That's coming in from China to help generate some sort of revenue within your country. That makes it even harder. The United States, Australia is so bad. I'll tell you this right now. It's so bad right now that it's going to make... do you remember the housing crash in 2004? The build-up in the United States in 2004, 2005, 2006, 2007, up to 2008? This is going to make... That housing crash in Miami, the average one-bedroom condo was $40,000, $50,000. It went up to $150,000. Two-bedroom condo in Miami was like $66,000, $70,000. Fort Lauderdale, same price, $70,000 for a two-bedroom. It went up to like 190, 200,000 in a matter of 4 years. Now, Australia has been sensing this for 15 years, and the average two-bedroom in Melbourne or Sydney, or a really attractive place to live, is going to be anywhere from 1.8 million Australian dollars or 2 million Australian dollars. What's the Australian dollar worth? It's equivalent to the to the Canadian dollar. It's at par. It's like 1-to-1. So people living in Canada, picture paying $1.3 million for a one-bedroom. Or $1.8 million for a two-bedroom. So, you see what I'm saying here? Australia, you need to follow Australia and what's been going on. Now, let's start. Remember, I'm teleprompter free, and I can't read, and I know nothing. I'm just telling you what I'm seeing and what I've been seeing in the housing market. And that's why I want to do a special edition for my friends down under watching the show. Here goes. So, I got a couple of links that were sent to me, and I found a couple of my own. This one's a bit older. It's from Thursday, October 20th, 2016, but I'm going to read this one because it coincides with what's happening here. So let's look back to a month ago, okay? What apartment glut rising. More cranes on Australia's east coast than in North America. I told you guys I wasn't kidding about this. Australia is in deep, deep doo-doo. Now, what's happening here? You know those cranes building buildings? You know, you're driving like, wow, look at that crane. Wow, look at that crane. Wow, they're building up the city really fast. Well, this is Australia has more cranes along its east coast than all of North America. North America consists of Mexico, the United States, and Canada. Okay, that land continent is probably 5 times the size of Australia. Okay, and that's only Australia's east coast. So let's continue here. One of the eye-opening statistics of the high-rise apartment boom is that there are now more cranes servicing high-rise apartments construction down on the east coast of Australia than in major cities across North America. The biannual crane count survey by global property and construction consultants of Ryder Levitt Bucknell, RLB, found that there were a record 528 cranes working above the apartment blocks in Sydney, Melbourne, and Brisbane in the September quarter. That was just a few months back. The RLB survey tallied 419 cranes plying their trade in the residential construction game across major North American cities, including New York, Boston, Chicago, San Francisco, Los Angeles, Toronto, up to Calgary. That's a lot of land, people. That's like New York to Calgary is like 5-day drive, 6-day drive. Over the past 3 years, the people of cranes in the use for residential construction has grown extraordinary 313%. However, growth of this has moderated sharply in the last quarter, with the number of cranes in Melbourne down from 124 to 109, and Brisbane down 98 to 87. Sydney is still booming, though. The residential cranes increased from 239 to 258 over the past 6 months, while the rest of Australia conditions were fairly flat, just 3 cranes to take a total to 74. Do you know what this means? This means they're working hard to fuel the bubble. This is what they're doing. They got to keep the bubble expanding so it doesn't pop. So what do? They go ahead and keep building and building and building, and then leaving these places empty, so then future Australians and Australians coming in the next generation can never afford to buy anything because they're bought out of the market even before they're out of the womb. Let's continue here. And you know what? To this... Why? They didn't mention affordable housing in there. Because there's a lot of people that are on lists for affordable housing. This just mentions more stuff to sell. That has nothing to do with people living in poverty or work poor people. Let's continue. IMF points to housing as Australia's key financial risk. Oh, you don't say? The International Monetary Fund has praised Australia for maintaining better economic growth than other developed nations, but argued more could be done to minimize the housing sector risks. It's entirely built off housing and student loans. The IMF said Australia has been subject to a new mediocre of low growth, stubborn and unemployment, and weak wage increases that has affected most of the developed world. Wage and prices and price pressures are weak. Unemployment has risen, and non-mining investments is yet to fully recover. The Washington-based institution observed in the last update on Australia's economy. The IMF did not. The IMF did note that Australia has maintained stronger growth than most other advanced economies. However, it also warned that Australia remains vulnerable to a downturn in global domestic economic conditions. The balance of risks have improved, but is still titled to the downside, the IMF cautioned. Really? This has been going on for 15, 16 years now. A major concern in the external risks with large impact, including a sharp growth slowdown in China, could intact with or even bigger domestic risks, especially a housing correction. That's a quote there, so I'm just kind of talking like he would. Lending limits cool hot housing, but tax reform would help. The fund said that measures by bank regulator, the Australian Prudential Regulation Authority, have helped to mitigate the risks of housing bust. APRA prudential measures introduced in 2014, including tighter lending standards focused on debt serviceability, have improved the risk profile of new loans that the report observed. Of course, they're going to say something positive about this, but you know what? However, the APRA may need to intensify these home loans limits if investors and other risky lending reaccelerates. Again, investors. What about the people? Investors? You're only tailoring to investors? What happened to people? Don't the common man that wants to lay roots with his family? Doesn't this guy have some sort of a say in that? They keep mentioning investors. I don't know. I have no education. I don't know nothing. But when I hear investors, I hear someone that's going to obviously speculate in the market. Let's continue. I read this story before in Trends in the Housing Market Worldwide, but it does pertain to Australia, so here goes. Could Trump Australia's property market? Could Trump Australia's property market? The old rundown 5-bedroom home in Chastown in NSW, I guess north, southwest, I'm not sure what state that is, had only been for sale for short months. When it went to auction, it had a reserve price of $3 million. Yeah. So people living in Canada watching this, I forgot to mention this. I know that they have bidding here in Canada where people bid on prices back and forth with the realtor. They call back and they give an offer and they call back. This is different. They actually have an auction house. They go into the house and everybody meets up there, like 15, 20 families, and they just start bidding on the house. And it keeps going up. So this one had a reserve of $3 million. Do you know you could buy 250, 300 acres of land in Texas for $3 million with probably a mini mall built into it and a gas station to profit? Anyways, I'm not saying much more about that. Quite good price considering what this looks like. The place is a piece of crap. This is $3 million. During the auction, there was strong competition for the house. Bids were flying in, as none of the 4 strong bidders were willing to give up the house. The lengthy auction turned into a battlefield. The auctioneer, full of adrenaline, kept going. A crowd soon built up as onlookers and neighbors stopped the show. 64 minutes and 204 bids later, the house sold at a whopping $3.91 million, almost 25% above the reserve price. This auction in Chatswood may have gone on record as the longest in 30 years, yet is not the only one to sell above the reserve price. In fact, according to the domain, property prices have been over the reserve price for a while now. Eager spring buyers are pushing prices even higher. Many homes will now be selling more than $100,000 over asking price in Sydney. Disgusting. This is disgusting. There's something, okay, this doesn't look good. This is awful. This is disgusting. The Australian property market still seems to be going strong, unaffected by turmoil abroad. On November 8, Donald Trump shocked the world by winning the U.S. presidential election. The increase in uncertainty that his election has caused hasn't deterred buyers. Last weekend, Sydney achieved the preliminary clearance rate of 84.2% from last week, 78.8% from Melbourne this week. Data has also increased 76.1% last week to 77.2%. Now, long-term interest rates have been great for property prices, free money. As interest rates go down, the value of property rises, and interest rates go up, the property value decreases. Historically, low interest rates have meant that people have seen their equity increase to buy property. So this is horrible, guys. This is so bad. I'm gonna cry. Yet This could change soon with Trump's election. You see, President-elect Donald Trump may mark the end of interest rate cuts in the U.S. during the election. He accused the Federal Reserve of keeping interest rates low, saying the interest rate policy should change. And after so many years of growth and depressed rates, U.S. rise could give the excuse the rest of the world is needed to follow the same path. Thank you very much, Donald J. Trump. Thank you. The only person with anything on with a pair of cojones on him to go in and stop this, because this is robbery. This is stealing Australians' future. Absolutely disgusted. So if you in Canada think it's pretty bad, try buying that house for $3.9 million. Is Sydney really in the grip of a housing bubble? What? Are you doubting that they're in a grip of a housing bubble? Let's read this. Sydney's sky-high property market has spawned doomsday predictions of housing bubble on the verge of collapse. But it's a bloodbath, inevitable, asks Ian Lloyd. Bidders slugging it out for a $1.7 million shed. An apartment bought for $750 large in 2015, selling for $1.08 million this year. Neighbors quadrupling the value of their homes by banding together to sell the land in one transaction to developers with deep pockets that are hundreds of millions of dollars deep. Welcome to Sydney, the glittering coastal city built around a blue water harbor where the median price of a house is more than $1 million. Good value? For those who can't afford it, Sydney is, after all, a financial capital of the country, enjoying a record 26-year economic dream run, a clean, safe, and well-managed city with mild climate and world-famous beaches. We've seen some crazy results, said Hannah Bolsky, an agent with Renee and Bondi Beach, who recently sold the same property for the fifth time in 8 years. So flipping. The studio fetched $461 in 2009, $525 in 2011, $610 in 2013, $750 in 2015, and $860,000 this year for a studio. It's one of the best markets I've ever worked, he says. Bubbles. People, this is out of control. This is severely out of control, and I'm going to tell you, after I read this newest article from yesterday, basically what Canada did, or what the city of Vancouver did, to combat this problem. Apartment prices in CBDs are falling. Apartment prices falling in Australian CBDs, and its major cause for the alarm. Prices in our major city centers dropped an average 6.3% in the last 12 months in July, according to Cork Logic figures. Every capital city CBD posted a decline in growth, where the largest declines are coming from is even more telling. It has been driven by our two highest performing capital cities. Sydney, CBD department prices tumbled 9.1% over the last 12-month period, while Melbourne CBD units have dropped in price 8.4%. A column in the Australian published Wednesday cited that a one-bedroom apartment in Melbourne recently selling for $161. The asking price for the asking price was $161. That's good. Apartment in general market would have been in the order of $550,000, the column claimed. Clearly, one seller was sick of the fact of their apartment was not selling and simply put it on the market for sale to the highest bidder, the column read. This is because we are seeing more and more large apartment developments coming into the market, prompting fears of an apartment oversupply. The concern is amplified by the fact that Chinese investors are largely the buyers of these new developments. Regulation states offshore buyers can only purchase new real estate, leaving the secondary market open of property that sells way below the values investors paying for them off the plan. So that's nice. Okay, so you want to buy a new home, a new development, a new condo? No. Buy something secondhand, Australian, because the new stuff is more for foreign investors. In the next 6 months, many tens of thousands of apartments in Melbourne and around Australia that have been bought off the plan. Chinese and other Asian investors will come up in the settlement, the column stated. three stages of risk. So it goes into the stages of risk, and it talks about struggling first home buyers. Reading this, maybe rejoicing, and yes, it is good news for affordability. That is good news for the economy. So you see how much things have changed from the cranes back in October, from the first article I read, to November 20th, 2016. See how much things have changed. Now, I took the little thing here to print off some comments on some of these articles that I read, and it's really, 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 really saddening. You know how this is affecting so many people in such. It's so saddening that people are divorced couples are living under the same roof because they can't afford to buy. You know, they can't sell and buy a place for each person can buy a place. You have inheritances with people passing away and they can't afford to, or they're trying to sell the house or trying to sell the place, depending on the situation, and it becomes a problem when it comes to inheritances. But let me tell you guys something. It looks like things are the up and up in Australia. From when it started to now, it looks like things look like it's starting to crumble. Why? It happened in Canada. In Canada, there was a lot of problems here in Vancouver. The housing prices is just going through the roof. So what they did was they implemented a 12% tax on foreign investors. So if you're a foreign investor, so first it started like this. This is how it started. Stop picking on the foreigners. They're not buying. They're not the ones speculating the market. Leave the foreigners alone. They have nothing to do with the housing prices going up. Okay, so let's put a foreign tax on for foreigners that want to buy in Canada. They put the foreign tax, nothing sold. Okay, then they're adding a vacant tax. $10,000 a year for every vacant home, and $10,000 a day if you lie about it. And Airbnb or whatever you call it doesn't count. So you see where I'm going with this? Canada said, okay, if it's not the foreign investors, let's just put these taxes on. Let's do it. It's not having to do with foreign investors. It's not going to hurt anybody. And now we're stagnant here. Nothing's moving. For sale signs everywhere. I'm even getting called by realtors wanting to sue me because I'm filming the outside of houses on the sidewalk, telling me that I have no right to film a house that's publicly for sale. Anyways, let's continue here with some of these comments. They're really good. I live in Australia and have expected a crash for at least 3 years. So I sold my home about 2 years ago. But things are still strong. I don't understand it. I think it's the only game in town with interest so low and the share market weak. Very good comment. My trouble is divorce settlement combined with illness has set me to the wall. I was predicting a New Zealand financial collapse at the same time, and New Zealand seems to be rolling over. Can it be long before your housing market? Then someone else says, I really don't know how it is and is still going the last 5 years. 40% housing growth with 0% wage growth. I live in Melbourne, Australia, and if I try to tell a homeowner the prices may fall, they will tell you are crazy, and they will never go down, just keep going higher. Also witnessing fear of missing out and buying firsthand. And he puts in question marks bubble. It's a bubble, buddy. It's going to go down. It's going to go down. It's going to crash. I've been waiting for the crash for at least 10 years now and have realized that it will never happen. There are too many greedy people in Australia and Chinese who would never give their money and their lives for a house in Melbourne if they have to. I live in Australia, and the one problem is that we have had recessions since about 1991. Some home buyers do not even know what a recession is. The whole market is mentally and a private debt level. The private debt level is now at the highest in the world and totally unsustainable income price ration. It exceeds 1 to 10 in Sydney, Melbourne. There's another one here. We should have a recession already. It's the policies which have saved us. That's very true. First home buyers grant double and triple annotation allowed for speculation and property and foreign investment have kicked the can down now. The problem is China can only invest in new development and it's not existing residential. Unfortunately, if prices keep going up, no more first home buyers from Australia. So I just wanted to read some of those comments out from this. Some pretty good comments there. I wanted to put this out there for the people living down under in Australia. Hang in there. Things are going to change. I do see, in my predictions, I do see the United States raising rates to start kind of building its economy back up. And I see the United States want to pay off its global debt of $20 trillion. So I do see the United States having to raise interest rates to stimulate the economy. I see a lot of foreign investors not parking their money in Anglo or English-speaking countries. I see a lot of things changing, and I think it's going to be a big rude awakening, especially every Australian will be affected by this crash when it does come. If interest rates keep going up, you're going to start seeing to stimulate the Australian economy because, like I said, everything's offshore now. So if more things were being produced in Australia, that means hiring more Australians, and then that means increasing productivity, and then that means increasing exports, and then that means increasing profits, and then that means increasing middle class. But that's not happening. Anyways, guys, let me know what you think. Comment below. I really tried my best with this Australia one. Let me know. Comment below, and thanks for watching.